Thank you to everybody. Let me get back in front of this camera. Alrighty, we're back, and I think all our bodies have broken nicely. Had a little body break there. All right, see, I turned those words around. You see that? Okay. We're now going to go back into like the money discussion when it comes to this sector. So the discussion now is the bankability of the filming value chain. What does that look like? We had the investment discussion yesterday as to where are the pockets for investment, how can we find money, where do we invest, what does the infrastructure of investment landscape look like when it comes to the filming value chain. Is it about building studios? Is it about capacitating the mind? But now we're really trying to drill that down and understand where does that money come from? And is this sector really bankable? How can we find the ROIs? We tried to go into business to find funding models yesterday, but I think it was more about the investment part. So this discussion is going to be led in partnership with Prosper Africa, an organization that from halfway across the world, across the Atlantic, they are very, very determined to make sure that we prosper as this continent, therefore prosper Africa, right? And in this panel, we also have Jason Fleming from USAID. And joining this fireside chat is Mainzega Baza, who's a distributor, but also a very, very keen mind in terms of how the money should move around in this continent. So I'm going to welcome Lisa, if she can introduce her team for our fireside chat. Thank you.
When we sit.
Hello, everyone. Thank you for this opportunity today. As Azania said, not a panel, but really a fireside chat and a bit of brainstorming. This is a topic, the bankability of the sector is something that we three have been talking about quite a bit. It's something that we definitely want to crack. And so hopefully we can get you thinking in a different way about what it is that you do. Being a wannabe creative, I know that really passion comes first, and thinking about your project and your narrative and what it is that you want to get across to people is what drives you, it gets you out of bed every day, but you can't do that if you don't have money. And so really our part of our objective is to get you all thinking as the business people that you are. It's a marketing slate many times that you offer. You know that you're doing the pitch, but we're going to try to figure out how you do that pitch and get money, and where should that money come from. So my Nzike is always saying to me, it's the money. You need money to make money. And so that's what we want to talk about a bit today. So I'm with Prosper Africa, and just quickly, it's a US presidential initiative, and it's all about two-way trade and investment between the US and Africa. So that very important nexus across the Atlantic, as Azania was saying. We want to drive an increase in trade and investment that is on a really transformative scale. So we have a couple of sectors that we look at, but one of them is definitely the creatives. And the creative sector is important to us for a number of reasons. One, we do believe it's bankable. We do believe that it's investable, and we've got to figure that out. But also because we believe that it is going to be a game changer in terms of jobs and upskilling, especially for youth. And so that's something that we care about. We also care about the digital transformation part of it. The tech disruption that is coming out of this sector is in many ways going to help leapfrog markets and leapfrog economic development. And then also the narrative. As Prosper Africa, we are out trying to attract large-scale capital to the continent. For us to do that, we need to change perceptions. We need to change perception of risk, but we also need to change perception about vitality, vibrancy, ideas. There's so much that's going on here in the continent that we want to make sure doesn't get lost to people. And so that's why Prosper Africa is looking at the creative sector, and that's why I'm really happy to be here today with Mayanzeke Baza. Mayanzeke is Head of Distribution and Financing for AAA Entertainment, and Jason Fleming, who was introduced, he is the Director of Regional Economic Growth for Southern Africa for USAID. I'm very happy to have them here today because over the last 5 years, Africa's creative economy has witnessed outsized growth, particularly in music, film, television. It's extending its influence around the globe. Currently, the creative sector in Africa generates around 4.2 billion annually, with a growth rate that is outpacing other sectors. This heightened exposure is acting as a key catalyst, propelling growth across various economic and social indicators within the creative economy. The increased reach is closely tied with the widespread adoption of digital technologies and expanded internet connectivity. US hunger for content has grown. I think you've all hopefully experienced that, certainly since COVID. During the time of COVID, there was just a need for content, and that's when the US looked to Africa and discovered the deep, rich vein of what is available here. The most visible American player here has been Netflix, which has produced movies here on the continent since 2019. It's a streaming service that accounts for 57% of Africa's subscription video on demand. They currently have, or as of 2020, they had 2 million subscribers, but it's expected to go up to 6.3 by 2026. Disney and others are following suit. But the creative sector in Africa is now only 2.9% of the industry, an industry that is valued at $2 trillion. There's a huge gap, and that's what we want to try to figure out. How do we close the gap? How do we get the financing in to help the African creative sector get to be where it needs to be? So this is going to be a bit of a chat because we're brainstorming and we're still trying to figure this out. I also want to introduce Tahalia Barrett, who is here with us today. Tahalia works in our innovation shop for Prosper, and she's also brainstorming with us. She's new. She's just arrived in South Africa a month ago, maybe even. And so we're really pleased to have her with us too. So the first question that I have is for Mayanzeke. As one of the largest distributors of African film and television content to America, you often speak of the funding gap for creatives. You have strong partnerships in the US where American creatives have access to banking and investment products that are specifically geared to the sector. What would it take to create similar film units in African banks and to replicate financing for the creatives here on the continent?
So thanks for that, Lisa. It's quite funny because when you gave us the statistics earlier about Netflix, which is something they always hide, I guess because you're the US government, they give it to you. But of course, it's always, because oftentimes you can almost create a value when you know the impact that, you have. If you think about it, just from a Netflix perspective, because everything is based on subscription. Once you know how they monetize you, you can almost create a value in the content you create for them, instead of them giving you a value. I know I'm digressing. I think to your questions, I think there was a panel earlier talking about wildlife, which I thought was quite interesting. One of the last questions the guy mentioned was, how does one make money in this industry? Or specifically to them. You go up the mountain, you look at the birds, you sit there for 8 hours, then what do you eat? When you go home, how do you switch on the lights and make sure that things are taken care of? I think one of the key things for me, which really gave me a perspective, the guy was like, firstly, is passion. Then the rest, think about ways of how you make money, which I think maybe is one of our biggest problems with our sector. Passion is key, right? You have to be passionate about what you create. It really helps you to go further when you're tired. Because passion is the one that propels you to continue going. But I think one of the biggest issues we have is the fact that a lot of our content is driven by passion A lot of our creative process is driven by passion rather than what the market wants to consume. So yes, this is by no doubt, this is a fire show industry. Globally, it's a bankable sector. North America, as you say, is probably one of our biggest bankable prototype we can look at, because you've got other, Asia and Latin America. But let's say if you took North America, which is based on Hollywood, that's where the sort of like how bankability should look like, where when you create a product, there's a market that you can really put it through, and that market has already created a value for the product you're creating. So now when you go and make a movie or a series or something, you already know how much you need to invest in that project in order to have return on investment. So I think to us and how we go about it, I think firstly we need to start taking ourselves seriously, which means you need to know that passion doesn't pay. So passion with also an understanding of what consumption would look like is what we should be focusing on. So we need to start thinking about how to not be the people who just make one project, but also to think about a whole portfolio of things that we need to be able to take to the banks. One of our greatest challenges, of course, in South Africa is that you have a lot of development banks that invest money. It's not a problem. We have a lot of development banks that invest into the film and TV business. The likes of IDC, and then you have some of these DFIs like NEF, and then you have some development funds like the National Film and Video Foundation or smaller nyana businesses. So that really exists. But from a private sector perspective, you don't have the actual banks investing in this sector as compared to other global markets. I used other global markets because we always position ourselves, look up to Hollywood as the key market, right, from a value chain perspective. Also, the honest truth, the content we create in South Africa, outside Africa, its biggest market is in North America. I'm a distributor, so I sell all over the world. But some of the content that I've sold, they do more sales in North America than anywhere else in the world. Quantifiable even to value. I hold one of the biggest distribution, so at least from Africa to the world. I have my biggest client is Netflix. Probably 70% of the content of Netflix I will have had a hand on it or help it to get onto Netflix. I work with global players. So I think, to your point, our greatest challenge and our greatest opportunity is we need to first take ourselves seriously. That we don't look at this market from a passion perspective, but also we need to look at what am I creating for who? And how much I should be creating this for in order to make the money that I've invested. Because then that way we can start to create what they call a balance sheet, that when the banks looks at it, they're like, okay, this is a business to invest in. But if you go to a banker, maybe Jason can, if you go to the bank and say, listen, I want to make something that I'm passionate about, they look at you like, what are you talking about? Like, I'm not here to finance your passion. I'm here to try and make money for the bank. So I think for me, those are the things that we need to start thinking about.
Yeah, no, thank you. And Jason, I think people understand the distribution side of the business, but I have a twofold question for you. The first is, what is it that you do as it touches the creative sector? Can you describe your portfolio? And then, well, maybe I'll start with that, and then I'll ask you part two.
Sure. Well, thanks everyone for attending and listening to our panel. It's an honor to be here. My name is Jason Fleming. I work for the U.S. Agency for International Development. I tried to dress like a banker as much as possible today to give you the perspective of the bank. I also heard the word bankability. I think I might call it financeability, because the bank might not actually be the place that you start to capitalize your project. The bank is one, but many avenues for that. Quickly, just a touch about myself. So I've been in the business of trying to increase access to finance for businesses writ large. Never have I actually worked in the creatives industry until we started working here in South Africa. I just moved here like my colleague. But what I have done is worked a career in trying to increase access to finance for small farmers in Ukraine, indigenous ecotourism in the Brazilian Amazon forest, hydropower in Indonesia, all projects that are terribly difficult to finance. We're also part of this larger US government apparatus here in South Africa that's trying to create jobs in Southern Africa. That is my remit as the Regional Economic Growth Director. We also have an initiative called Atlanta Pambili, where we're trying to increase ties with Atlanta and South Africa in particular, which has convalesced around the creatives industry in many cases. So there's that aspect of what we're trying to do here as well. We manage a large trade and investment program. A lot of what we're trying to do on the investment side of the house is stimulate the venture capital industry here in Southern Africa. So we have a program called Mobilizing Investment. Right now we have 18 partner venture capital and private equity funds that we're working with. It's not specific to the creatives industry, but what that commonality is financing difficult projects, particularly startups and entrepreneurs. I think what we'll get to today and what I will try to reiterate is that as you think about finance, the commonality in finance across the board is building trust. Building trust through a team that is super professionalized, and also building trust through increased transparency. I used to underwrite insurance products for banks, and transparency was just a huge issue. So what is your commitment to being transparent about your budgeting, being transparent about your numbers? And then, to your point, focusing on sales, because that's how you're going to repay your investors, which may not be a bank. It might be in the form of some sort of private equity investment. But how do you ensure that you're repaying your commitments, essentially? Folks that are taking additional risk need to be rewarded in a sense, and so you have to have that commitment. I think the way you get to that commitment is through understanding who your audience is and increasing your sales.
No, I think Maya Nzike calls it social capital.
Yeah.
In addition to your business plan.
No, totally. I think, I once went to a bank and I said, listen, I have this deal structure with Netflix. I need to cash flow it. And so they look at the paper is good. It's a AAA rated entity. So, but then they look at me, they said, hey, what's our risk mitigation factor? If all else fails, how are we going to get our money? So they go through my profile. They're like, you don't have enough assets. And then I was like, okay, so, my historical disadvantagement does not really allow me to have grown such, collateral. They're like, do you have an uncle? I'm like, an uncle for what? But again, it comes down to the social capital, right? Someone who can stand in for you and say, no, I believe in this guy. I've got an asset book or whatever collateral with the amount that is trying to get from you, which they call it a guarantor, right? Someone who can really guarantee. And you don't necessarily get a guarantor. It's about that social capital that you could build, unless you've got someone within the family. And that's sometimes the financial way of doing things, is if you do not have it, then build a social capital. People who probably could stand in for you. Not anyone, of course, from a bank perspective to what Jason said, banks works differently, but there are other maybe financial tools around, or equity investors or private investors that can really come into projects. But also it's all built on social capital. You give money to the people you trust. You don't just, hand out a lot of money to anyone, because you don't know what they're going to do with that money. So how do you build that trust?
Yeah, trust is a big element. The second part of the question that I wanted to ask, because as you said, maybe we're not looking at bankability, maybe we're looking at finance. And so the creative sector, when people think about it, they think about film, music, fashion. They don't think about technology. And really, the creative sector is the tech disruptor right now. If you look at AI, if you look at virtual reality, if you look at the data centers that it takes to do the work that people are doing in animation and gaming. One of the most exciting projects that I recently heard about was a movie deal, but it had a video game that went with it, it had a graphic novel that went with it, it had music that went with it. And so all of these different ways to monetize. Do you think there's a way to attract venture capital and that early stage catalytic capital to those kind of opportunities if the balance sheet isn't quite there yet for film?
Well, it's a great question. I would say all of those opportunities are going to be opportunities that bankers understand more than the film industry, I think, here. So wrapping their heads around the financials of a startup tech firm is possibly easier than wrapping your head around the risks associated with production of a film. And so it gets back to the sales point. If you're diversifying a little bit on that end of things and creating different business models, then it's easier to finance. On the venture capital side of things, we find that it's still a nascent industry. Understanding the return on investment for large institutional investors is a little difficult because it is so nascent. So if you're a pension fund and you're trying to invest in an asset class that is not yet determined what the standard return on investment is, it's a little bit difficult to attract that capital. And I would say that a startup business is maybe similar to a startup production project because the risks are just unknown in terms of, is this project going to succeed or not? You're investing in a startup as opposed to a tried and true business, which is why it's easier for a business to go into a bank than it is for somebody like you all going into a bank.
Yeah.
And maybe a question, again, this is always a question for me when I go and raise money, because VC is always a difficult one to attract. And maybe an understanding of what are the parameters of venture capitalists when they invest into a project, because it also to start to help maybe the creatives or the production company to think differently. Like, how do you build up a portfolio to be able to attract venture capitalists? Because from my understanding, I know that if a VC comes in at a certain value, it wants to sell at a better value and over a period of years. But how do they determine the potential for an upside when they invest? So maybe those are the things, maybe just to give us an understanding, how does a VC approach an investment opportunity?
Well, one of the big issues is liquidity in the venture capital model. If I'm investing in a basic business, as an investor, I need to know where I'm going to sell that business and how I'm going to actually increase my returns through the sale of the asset. And that's actually quite difficult in a market where the stock exchange has limited ability to list smaller companies. So you're looking for essentially an exit to another business or to somebody else who wants to buy that business. In your case, maybe it's selling your product, if that's a film or whatever, to an entity that wants to buy it. But